Hi, this is Wes Middleton. Thanks for joining me today for tax tips. And today's subject is the 1031 exchange and how that changed under the Tax Cuts and Jobs Act, the TCJA, that was passed in December of 2017. And the thing we're going to talk about is how in the old law, and you exchanged like-kind property, the gain on the sale was deferred into the new asset. And that applied to both personal and real property. Under the new tax law, these 1031 exchanges now only apply to real property. They don't apply to personal property. So what that means is, for example, is if you're in real estate and you go to exchange a property in a 1031 exchange, you will have to separate the personal property from the real property. Now, it may be that you have no personal property, but for example, maybe you're a hotel and you have the beds and the furniture and all those things that are part of the hotel, but yet that personal property will be excluded from this transaction, and you will pay taxes on the sale of the personal property, and only the real property can be exchanged. Now, an interesting thing has come out of this is that while we have focused on real and personal property, there are other types of exchanges that do happen that will now be included under, that will now be taxable and not be excluded or deferred. In a blog that I wrote here recently, and you can check it out at mrzllp.com in our Idea Center. Scroll down there, look at the blog, and what I'm talking about is, for example, is when the Houston Texans have exchanged a player with another team, they actually are not exchanging players, they're exchanging contracts. So the IRS has held historically that the exchange of those contracts can be a like-kind exchange. And so maybe if you look at the recent transaction that happened with the Washington Redskins and the Kansas City Chiefs, where Alex Smith was traded to the Redskins, you would say, what's the value of the contract compared to the market value of the player? And then is what they gave up, what's that value? So in the past, those have been exchanged and there's not been a taxable event because they've been considered like-kind exchanges. Under the new tax law, these will no longer be like-kind exchanges. They will now be taxable events. So it'll be interesting to watch what happens in the sports world with this new tax law, as the trade of players will now be, at least have to take into consideration that the contracts as they're exchanged will no longer be tax deferred. They'll be taxable at the time they're exchanged. So keep that in mind. If you're in any industry, construction, real estate, whatever it may be, personal property is what you'll focus on that no longer qualifies for deferred treatment, only real property. And as you're planning out the coming year, that's something at least to put into the mix to plan on. Thanks for joining me today, and I look forward to talking to you again.